Hi, welcome to the Market Alert for Wednesday, 4th of September 2019. Still have computer problems, hopefully sorted today. So I'm recording this on the laptop because I want to bring you up to speed where we are. And so it might be slightly different, look different, sound different, but it's the best I can do given the circumstances. But I should be all sorted by today, just waiting for a new hard drive to arrive. And then I can restore the computer. So yesterday we've got bonds, Bitcoin and bullion bid higher, manufacturing slumps, and it sparks a bit of a sell-off in the stocks and commodities. So let's have a look at the Dow. We can see for the last 2 days, Monday the market was closed in observation of Labour Day celebrations, and yesterday back to normal. You can see the volume a lot greater than Monday and starting to move higher on the overnight there. So let's just mark up for the upside because as I've said before, this is where they want the market moving to the upside. And you can see that we're tied in more or less at the same area there for the 76% retracement and also the high that we see over here. Now we did get a new high here, and let's just mark this up as well, because if we take out these two areas here, then we can expect to have an attack on this as well. And then we've got the major 76% retracement in here as well. So I'll just save this. Yesterday in the 5-minute chart, let's have a look in the pre-market session. Always fascinating to see. We have prices going through the 200 bar moving average in these areas and then failing to hold. And then as I drag the chart over, you'll see that seemed to set some sort of precedent, and the market kept getting bashed lower each time that it came up to this area. So then once the main event opened, we see prices moving lower. And again, if we come over here, from this high to this low, a 76% retracement was here, bang on the 200 bar moving average. Prices then move lower on a Trump tweet, believe it or not, about the trade deals falling apart with China. And then we see prices finding support and then putting in a 76% retracement and then moving higher, but only to fall back once more. And they fall back from this low to this high. I'll just drag this across for you to 76% here as well. So this short, you know there's going to be some support in this area. And then if we move the chart across, you'll see that prices rallied back, and then the plunge protection team have been out and moved prices back to the upside. There's a great interview on Zero Hedge from Ron Paul talking about the Fed's intervention in the markets at the moment. And I've said this for the last 10 years, and they continue to do this. I mean, it's blatant, absolutely blatant. And I'll have a chart for you tomorrow showing the correlation between the two as well. Meanwhile, in the pound, well, I don't want to get into politics, but yesterday there was a vote in the House of Commons which sent the pound, or the prospect of the vote, sending the pound lower. The market seems to like the fact that we could be heading for a general election now, and we're seeing prices move strongly to the upside there, and currently trading above the 200 bar moving average as well. In the 15-minute chart there, you can see prices moving higher, also above the DP level as well. So the prospect of a snap general election, I think that's going to be decided today. Like I say, I don't really follow politics because without money, you haven't got any politics, in my opinion. So there we've got the market testing for yesterday down at multi-year lows and starting to make its way back. So if there is an announcement today, expect a bit of a bounce in this market. So what have we got out today? Nothing. Only inflation hearing reports at 2:15 for the UK. Never heard of that before. Must be a new one. That's at 2:15, so before the Dow actually opens. And Bitcoin, a bit of a surge on this over the last couple of days, coming off these lows. and moving to the upside. Let me just rearrange this chart a bit here. Certainly not as easy on a laptop as on a desktop. So here we can see that prices are moving sharply higher. We had some selling pressure yesterday. No surprise really, because we've got these highs across here where the market would find some sort of resistance. We are through the 76% retracement from what I can see. Certainly from this one to this one. And if we just measure back, we'll see that we're still in this area. And then if we go back to the recent high to the recent low, we've got plenty on the upside here at the moment. So we've taken out these areas here, and we could see prices moving up to this resistance here. In the 4-hour chart, again, let me just adjust this so we can see a bigger picture of where we are. I don't like to see the smaller picture. I like to be able to step back and see exactly where we are in the market. So you can see there the market finding support in this area before then moving back to the upside there and trading back to the 200 bar moving average. Very important area for the 4-hour chart. Now last time it looked at these areas, it traded back through. So again, keep an eye on this one for any sort of weakness, because then it will accelerate to the downside in the 15-minute. Which yesterday you can see prices moving sharply higher as they did on Monday. You'll see there they broke out to the upside. It was very quiet, and then all of a sudden the market moved to the upside. It was sparked into some sort of life. You see the trades there going on to past the target prices, and yesterday we had a short above the 200 bar moving average. Prices were brought back, you can see this here, and then they managed to move prices up. Had a bit of a shakeout here, but then the market has found a bit of support, and overnight prices stuck in a bit of a sideways range there at the moment. And finally, let's have a look at the other bits and pieces. Deutsche Bank managing to make its way back to the upside. There is talk of quantitative easing and the reduction in interest rates a week tomorrow, ECB meeting. And again, a very good article about this on Zero Hedge, about how there's division amongst all of the ECB members on whether to print more, reduce rates, or a combination of the two. But on the 31st of October, coincidentally, which is obviously D-Day for Brexit if it happens, Draghi leaves and Christine Lagarde comes in. So that will be interesting as well, how those two dates seem to be the same. And this is a woman who hasn't got an absolute clue about monetary policy, so I wouldn't be surprised if she doesn't just turn the printing presses on to keep it alive, because, as I've said before, with all of these, they don't want it falling apart on their watch. So, of course, if you increase QE, that, and also reduce interest rates, that means it affects the profitability of the banks. The banks' share prices are all heading towards all-time lows at the moment. So that's going to put massive pressure on Deutsche Bank, which we can see at the moment is being supported. So it's a juggling act for Lagarde when she does take up the position on the 31st of October. Meanwhile, in the implied volatility, we can see that this is sneaking back up. There's a bit of uncertainty in the markets, just at the 20 bar moving average there. And if we look at this in more detail with colours, we can see that we've got a bit of potential weakness in the implied volatility, or strength, not so much weakness, but the strength gaining in the implied as they see a bit of indecision in the market. But we're still above the 20 bar moving average, as we saw in the PPT chart, daily chart that is, of the Dow. So a bit of weakness around there in the market, and a bit of strength coming in on the implied volatility. Meanwhile, the 10-year. This is stepping back and looking at the bigger picture. And once again, we can see how the dips in, or the inversion of the yield curve, is a precursor to recessions, as we can see here. And it's just a matter of time. And this is building nicely here for a recession next year by the looks of things. And then if we look inside of the picture, always step back, look at the bigger picture first, then go and look at the detail. You can see that we're minus 0.51 for yesterday, so still making those new lows in the 10 3-month yield there. Okay, that's it for this one. With a bit of luck, it will be a bit more fluent tomorrow when I haven't got to try and think about what my hands are doing and working out how different this is recording on a laptop, and we'll be back to normal. So with that, as ever, thanks for watching. See you in the next one.